Hey, what's going on? It is April 8th and welcome to Trading Options Network. So, I wanted to come on and talk about how we trade in high volatility situations, if in fact you do want to trade. But before we go ahead and do that, let's go ahead and get our disclaimer out of the way. Weird, I don't know why I didn't want to move for a second. That being said, everything we discuss here is solely my opinion, not the opinion of Trading Options Network, so do with the information what you will. But take responsibility for your actions, of course. Be sure to like, follow, or subscribe on your favorite social media platform. All right, now let's go ahead and get into it. All right, so right now I have the SPY chart here pulled up. And if we look at this, and yes, this is a paper trading account, but if we go ahead and look at this, people were excited this morning when the market gapped up all the way, the SPY all the way over 520. That was a big jump from where we closed yesterday, a big gap up. However, it was met with a lot of selling today. A ton of selling today. I think a lot of people saw this as an opportunity to get out at the highest possible moment or price point before we go to our next leg down. Of course, if you listened to my video yesterday, you would have heard me talk about how I think this is just going to be a small bounce, nothing to get super excited about, and then we go ahead and go lower. And that seems to be exactly what is happening. So how do you trade this? Well, you don't want to necessarily go out and just buy some, puts, okay? If we go ahead and look at, not analyze, the options chain here. This is for options that expire this Friday, just 3 days away. If we look at these, actually I'm going to do all so we can really get a good idea. All right, so right now at the money, we're looking at a $14 premium, over $14 premium. We can go all the way to $4.50 and we still have a $3 premium. People are literally spending $300 for one contract that expires in 3 days, that is literally 10%, more than 10% out of the money. That is insane. Okay? If we look at the volume and the open interest, look at this. The volume, 15,000 contracts that are more than 10% out of the money that expire in 3 days have been traded. 9,800 just today. That is absolutely insane. I'm sorry, the open interest is 9,800. Not today's volume. But the overall volume is 15,865. That is absolutely nuts to me. Okay? So, again, buying puts is not what you want to do. Now, you could do a debit spread. Maybe you want to say, hey, I'm going to buy the 490 and sell the 480. Again, the problem with that is we're out of the money. Okay, and if we look at the spread here, we'll call it about 1270 and 925. I'll round it to 1275 and 975. Well, it's moving like crazy. But let's see, a little over $9 and $13. So it's about a $4 spread. Okay, a $4 spread, meaning you're risking $6 to earn $4. I'm sorry. I said that backwards. You're risking $4 to earn $6. Okay? However, again, you're out of the money. Now, that would not be a terrible spread. That would not be a terrible spread if you were already within that. Oh my gosh. And the S&P just dropped crazy in the last couple of minutes. Let's go ahead and look at the chart. I'm going to pull up the minute chart here really quick because that was a huge drop. Bam. Yeah. I'll say. That just dropped like crazy in the last few minutes. All right, but back to the options chain here. All right, so again, if you're looking at 490 to 480, you're looking at a $4 spread. You're going to pay $4 to possibly make $6. I just don't like that risk to reward ratio for something that's that out, I mean, I say that far out of the money. It's not very far out of the money, but it's still out of the money nonetheless. What I want to look for is something that is technically already kind of in between the two strikes, where I'm getting about a 50-50 risk to reward ratio. Okay. And what would be even better is if I could find something where even if it doesn't move down very much, I still end up being about even, or even possibly even making some money. Those are a little bit harder to find. Okay. But they are out there. They are out there. So am I going to look at a 490, 480 credit spread? I'm sorry, debit spread here? No, I'm not. But what I will look for are, what I just mistakenly mentioned, are credit spreads. I want to be a net seller. Okay, when the volatility is high, if we look at VIX, if we look at the VIX real quick, the volatility is extremely high. Let's go ahead and bring our day chart back up here. All right. The volatility is extremely high. It's 55.67 as we are talking right now. That is massively, massively high. And of course, that means premiums are going to be very, very high as well. And when premiums are high, we want to be net sellers. We much rather be net sellers. Okay? So if we go ahead and go back to the SPY options chain here. Here's something we could do. We could look at, say, the 500 call. The 500 call is $10. Now, I don't think many people are expecting the SPY to jump up, over 2% by Friday. Okay, now it's possible. We have no idea what is going to happen. It is possible, but it's probably not going to happen. I mean, we could literally do a credit spread here. Okay. And let's see, vertical. Let's go ahead and change these. So we're going to sell the 500. We'll buy, heck, we can even go really far out there. We'll do the 520. Okay. That's going to give us a credit of $7.31. And that expires on Friday. So essentially what we are doing here, it's not the best risk to reward ratio, so maybe we don't want to do it with the SPY. But we're looking at about a $7 credit while risking $13 in premium. Now, in order for that to happen, we would have to be $7.31 over the 500 strike. So we'd have to be at about, we'll call it 507 for right now. We would be in the money. We would make money as long as by Friday, the S&P is under 507. We would be in the money. I think that is highly likely to happen. Again, it's not necessarily the best risk to reward ratio, but that is something that we can do. However, let's go ahead and look at some other stocks, some other tickers. I do have this set up here. If I go ahead and minimize this, here are some bearish stocks based on what I look at. So if we look at Spotify here, we pull up Spotify. Again, this one was up to 560 almost. It is now below 520. So let's go ahead and pull up Spotify on our options chain and see what we can look at, see what we can get here. All right. So we don't feel like it's going to be going up. It's a bearish stock based on what I look for. Of course, the bid-ask spreads are not very, very appealing to me, so we'll probably not do anything with this. But let's go ahead and just kind of take a look at what we could potentially get anyways. Let's say I don't think we'll be above $500 by Friday. Okay. If I were to do a credit spread here, again, the bid-ask spread is going to make this very, very difficult, and it's definitely not one we're going to do. But I'm just curious to see what happens here, what it looks like. All right, so we have the 500. We'll buy, I don't know, 525. It's a nice spread. It gives us a credit of $13, which means we are risking only $12. Okay, and that is the middle of the bid-ask spread. So that is a phenomenal risk to reward ratio, in my personal opinion. And we're almost out of the money already. Well, I shouldn't say almost, but we're a lot closer to this strike than we are the 525. And we are getting more than what we are risking. Our reward would be higher than our risk, and we don't have to go down much. So that is something that would be a good opportunity, in my opinion, to open. Now, again, with the bid-ask spread, it's going to be difficult, so I'm not going to look at this one. So let's see if we can find one that has a little bit better of a bid-ask spread. Okay, let's go ahead and get rid of the Spotify chart, and let's open CloudStrike. Again, it gapped up and has been selling off. So let's go ahead and pull that one up. CRWD, I believe. Yes. All right, so again, these bid-ask spreads are a little bit better. Let's say, 320 is right here, just in the money. So let's go ahead and sell that one. Sell this vertical. And by the way, I did not do any kind of research on specific stocks here. I just had the screens opened. So this is all personal research as I'm working through this right now. Anyways, CrowdStrike. We're going to sell the 320. Maybe we'll buy the 330. Okay. Gives us a 5. See, I like this. I like this one a lot. It's almost a 50-50 risk to reward ratio, yet it is almost completely out of the money already. Meaning, even if, technically now it is, just drop below 320. So even if this does not move at all, and we finish at 320, we are going to hit max gain. We're going to hit a 100% gain, roughly speaking, because it's almost a 50-50 risk to reward ratio. So we'll be near a 100% gain in 3 days, provided that the stock just does not go up at all. That's all we're looking for. Okay, so this would be a great opportunity, in my personal opinion. And again, why are we capable of doing this? Because the volatility is extremely high. These are the types of trades you want to look for when volatility is high, when premiums are high. You want to be net sellers. In fact, I'm going to go ahead and open up this one right now, provided I can get it open. And, I don't know. Let's see. I would risk, let's do 10. Notice, by the way, when I update the sell, the buy automatically updates as well. Credit is at 510. I just want to verify that this is, roughly speaking, the proper amount. So I'm going to do a little calculation here real quick. $330. Yes. All right, so I'm actually going to put it at, I'll actually do it a little bit higher at 510 right now to see. Here's the mid price. The mid's at 510 right now. I'm going to see if I can get this to go ahead and go through. Send. And again, I know this is our paper trading account, but this is something that we can use to get better. All right, so right now it is not going through. So one thing I could do is I can come over to the activity and positions, click over here. Gosh, I am so used to doing this on my phone. I don't use it on the desktop very often anymore. I got to remember actually how to do this on the desktop. Is it right here? Nope. Gosh, where? Oop. Gosh. There it is. Working orders. I knew it was over here. All right. So I'm going to go ahead and right click on this, or I can also click over here, cancel replace order. Let's do, even though the mid now at $5, maybe we'll put it up to $5.15, see if we can get it to go through really quick. And if it doesn't go through, it doesn't go through. I'm not going to go any higher than this. There it goes. Oh no, that's just the cancellation of the first one. So it is still working. It's still working. Okay. So overall, we just want to see this to see if we can get this vertical spread, and it is dropping more, which is probably why it's not getting called right now. But we want to see if we can get this vertical spread to go through for us. Doesn't look like it is right now, but that's not a big deal to me. All right, let's see what else we can do. Let's see what else we can find on here. All right, CrowdStrike is one. Let's go ahead and Abbott. Abbott is usually pretty liquid for the most part. I'm not sure about Flutter Entertainment. I want to find one that's Palantir. I'm assuming that's what that one is. Yeah, you know what? Let's look at this one. This one is usually going to be quite liquid. PLTR. All right, let's look at the options chain here really quick. And what do we find? Okay, let's say, heck, even a 75.85. We're not going to get a ton of premium discounted from the 85, but I don't mind that because, again, I don't think we are going to be going up from here. And this is a nice bid-ask spread. It's pretty tight for the most part. So we're going to sell the vertical. We got the 75. Let's go to the 85. Ba-boom. All right, this gives us a $3.79 credit. It's not necessarily the best. I'm not a huge fan of that. Considering we're already almost out of the money as it is. I mean, we're still technically in the money. So we're almost looking at a 2-for-1 risk to reward ratio. I don't necessarily like that. I don't like that. What if we change the 75 to a 70 and the 85 to an 80? Maybe we can get a little bit better. Yeah, that's a little bit better. Obviously, we are right there in the middle. But we're going to get a higher credit, $5.62 credit. Okay, technically speaking, we are already in. Well, no, we're not technically profitable if it were not to move down at all, but it does not have to move down much, and we would be profitable automatically. So I actually do like this one. So let's see if we can get this one to go through. Okay, again, I'm going to change this to a 10. Boom. Mid 566. I'll even put it up to 570 to see if we can get this order to go through. Get it to go figure. It's already moving up. So let's see. All right. That one went through. So if we go over here to monitor, here's my Palantir. We sold the 70 calls and we bought the 80 calls. And we got a premium, not a premium, I'm sorry. We have a credit of, let's see, 3 of them were filled, a $5.70 credit. Okay, $5.70. So if we come back over to here, if we want to be profitable even a little bit, we did a 70-80 spread. So if we're going to take $80, we're going to subtract $4.30. Okay, that will give us, oh, look at that. Our CrowdStrikes just went through as well. Anyways, so if we go ahead and do 80 minus $4.30, that gives us a $75.70 stock price. Anything below $75.70 means we will be profitable. And we're already at $76.20, so we barely even need to move down. We just need to move down just a little bit. As long as we move down a little bit, we are going to be profitable. If we move down all the way to the 70 or below 70, then that'll be max profit for us. So again, overall, I just wanted to come on here to just discuss how and what would be the best options to trade. And by options, I'm not talking about equity options. I'm talking about your options. What are your options when it comes to trading when volatility is high? And these are the trades I like. I like to be a net seller when volatility is high. And I kind of just gave you an idea of one of the potential strategies I use when volatility is high. So I certainly hope you learned something. I hope you have a great rest of your day. The market's going to be closing in the next 5 minutes. We'll see where we open up tomorrow. Hopefully, after these couple of trades, hopefully we don't gap up again. I would not guess we will. If we go ahead and I'm going to pull up the SPY chart one last time before we go. I would predict that we will probably open up, honestly, right around where we are at right now. maybe a small gap up or gap down. And I don't think we're going to be moving much tomorrow, unless there's a huge catalyst where it causes the market to move. I don't see that happening. If we pull up the our calendar here, tomorrow we do have we have the FOMC meeting minutes. That could potentially move the market a little bit. We have nothing in the morning, so yeah, I don't expect a huge gap up or gap down, maybe a slight one, 1/4 to 0.5%, which again, in high volatility, that's not very large. Normal times it might be a little bit bigger, but in high volatility, that's not a big gap either way. FOMC meeting minutes potentially can move the market a little bit. That's why it's red right here. But ultimately, I don't see us moving a ton. Thursday, we could potentially because of the CPI data coming out. And then Friday, we have the PPI data coming out as well. So the next couple of days, we could see some massive movements. Time will tell. Time will tell. That's all I could say about that. So again, I hope you guys have a great rest of your day, and I look forward to talking to you guys again tomorrow.